in Bitcoin has their own cadence, their own ebb and flow right now. They've become very sophisticated and they've got a sense of the ups and downs. And
why do you say they're very sophisticated? Because I'm going to make the argument that most of them are retail folks who in the past 2 or 3 months got in at these inflated, what now seems clearly like inflated prices.
So the sophisticated,
but we're now being killed.
The sophisticated are the ones killing them. They're the ones who've noticed they all got in, they watched the price go up. These people measure their net worth, their holdings in Bitcoin itself. So all they want is more Bitcoin. So when they see it drive up like that, they expect it to come back down.
But they can't short it, so they can't be killing them that way. They're killing them just by selling it to them?
They're just taking the super liquid character of the asset. They're moving, taking a cash position, and then coming back in with the Bitcoin being lower.
I'm glad you're here today because I have a question for you. I have a new theory about altcoins, Bitcoin included. I've been getting approached pretty well every week to fund mining operations in different countries. For example, Iceland, or another one was pitched to me in Cambodia, where energy prices are basically free. Yeah. Tell me why this isn't going to eventually end up being the situation. If it costs, let's randomly say, $100 worth of energy and CapEx, you have to buy the equipment, the servers, everything else, to make a coin, any coin. And I'm being offered the opportunity to invest in it. Why isn't ultimately, because there's nothing proprietary but starting a new coin, I'm going to be given an infrastructure rate of return. So maybe I can make 7% a year, taking $1 million, setting up a server farm in Cambodia and mining XYZ coin. If the market gave me a 7% return and I felt that, that was safe, that people would use these coins, I would do that deal. That imputes a price on Bitcoin back as a few $100s. That's it. Well, tell me why long term that isn't exactly what's going to happen.
Bitcoin itself can be considered in important ways the most secure financial system in the world.
I totally buy that.
It is security.
But why am I going to get more than an extraordinary infrastructure return? Why would I be getting thousands of percent a year in the long run when really most normalized long-term markets will provide 7%?
You can increase transaction fees. The miners are making coin and fees on a number of things. Traffic volume. You saw all of that volume come in December when everyone was trying to buy on the platform.
But if a coin costs $1,200 to make, if the intrinsic value, if the intrinsic mining cost is $1,200 and the thing is selling for $7, what's going on here?
The competition is making those mining rigs.
I'm asking long term. I'm saying
sure. Those mining rigs are part of their own economy now, their own infrastructure. They're competing to become better, faster,
but they
stronger.
have to be connected to the price tag of the actual coin that they're mining.
And that's why there's more coins to mine, there's more jobs for miners, there's more jobs for miners being created every single day.
But is my theory about this, give it 7, 8%, because I'd be happy to put money to work long term at 7%. If I believed intrinsically that the market would allow me to make that return in mining these coins, because I'm taking electricity, I'm spending on CapEx, I'm hiring some people to run around with lights blinking, and I'm making coins.
And that's why you saw Quebec, Hydro-Quebec, just a few weeks ago announce that they're going to try and lure all of these Chinese miners with attractive electricity prices.
But that's bad for the price.
I also think, Kevin, though, the reason it doesn't necessarily, correct me if I'm wrong, go back to commodity economics is because it's limited, right?
You can't find more. I don't buy that. But I can make Wonder Coin. I can start my own Wonder Coin.
But I think one of the things you're missing here is that these miners have to waste energy. The more energy they waste, there's an infinite amount of electricity they can waste. They need to waste electricity in order to participate in this game of mining.
Before we go, do you think that there's manipulation going on in the market? Last week there was a fascinating article about how Tether might be a manipulation in all of this, and that the price tag that we saw in December when it rose up to $19,000 a Bitcoin was actually completely artificial.
So I think the important thing there is the CFTC subpoenaed that information back in December. So for 2 months under the eye of the CFTC, they were actually minting new coin. So it should be capitalized at about $2.2 billion. That seems like a reasonable number. It would be very audacious for them to have minted coin with the CFTC with that close of an eye on them. Okay. So we'll see.
We will keep an eye on this, Nolan. Thank you for coming in this morning. Appreciate it.
Very, very interesting. And, the point I want to bring up is that they're right that the miners have a lot of power. And in a way, they're very interested to manipulate these prices because, they themselves don't even care. And let's pull up the Bitcoin crash. Themselves, the miners, don't even measure their net worth in dollars or fiat. All they care about is Bitcoin. And in a way, I want to bring up the question. I'm just wondering who's buying in this market, right? I mean, crypto's getting killed, and all the people that bought in at 15,000 Bitcoin, 16,000, 17,000, I really doubt they're buying in now. I bet they're crushed, their portfolio is down. Even the people that bought in, let's just say in November and December, even at these prices, when it was before the crash, I'm sure they continued to buy here, and they're all now getting crushed. So my question to you, my audience, is who's buying now? And when this market does rebound, I'm just very, very curious who are the buyers pumping this market, because this market cap was 850 billion January 7th, close to 850 billion January 7th, and it's crashed the way it's crashed, and I have a feeling that it's going to rebound just as quick. I mean, that was less than a month for it to lose almost $500 billion. And I do feel like the miners are involved. I feel like, the very powerful and rich people in the crypto market are, kind of taking advantage of these dips. And I bet you anything they were offloading, which caused this crash to happen. And I bet you at a certain point, they're going to start buying again. So it's really interesting. Let's continue to follow this market, but I'm very, very skeptical. It's not a regulated market. So I have a feeling that, miners or, big money that has a lot of money and holds a lot of currency, they can move markets, and it would make sense that they would try to do what they can to manipulate it and make money off of everyone losing on the downturns, and coming into the upswing too late. So we'll see. Let me know what you guys think. If you haven't subscribed to this channel, please subscribe and leave your comments. It's really important. If it's on Facebook, please like the page and leave comments. I try to get back to all the comments, and I think it's very, very interesting what my audience thinks. So please let me know what you guys think.